Let me ask you something. How many people do you owe money to right now? Whether it's through student loans, credit card debt, a Netflix subscription, a payday loan from last year, Klarna installments you made for a Chipotle burrito, or even outstanding Venmo requests you have from friends. If you do have any of those, my guess is they're in the form of $5 here, maybe $100 there. They're divided into small amounts that pile on top of one another, tricking you into thinking you don't owe a lot of money until you see the total bill. As of last year, the average American owed over $105,000 across things like home mortgages, home equity lines of credit, car loans, credit card debt, student loan debt, and other debts like personal loans. Now, those numbers are absolutely being skewed by loans for big ticket items like a house or a car, and it's fairly normal and often can even be a good idea to take out loans for these kinds of big ticket items. Though, if you do want to understand the risks of buying a house or a car, be sure to watch my videos on being house poor or car poor after you watch this video. But even if we take away those big ticket loans, we are still left with significant debt. And that's not even considering reoccurring payments that we've gotten used to constantly owing, like a Spotify subscription or an expensive gym membership. According to a report by Bango, quote, the average subscriber now has 4.5 subscriptions and, quote, now pays a stellar $924 per year for subscriptions. 1 in 10, they report, quote, pay over $200 a month. That's more than $2,400 a year. Now, this video isn't meant to villainize or glorify subscription culture or any of these methods for accumulating debt. Instead, what I want to do is simply open up the conversation around how we are starting to become numb to owing money itself. It's like we're not noticing it as much these days, in part because debt itself has transformed into micro debt, these seemingly harmless little moments of owing money that really add up once you tally it all together. As for why this conversation matters in the first place, well, because I think we are in this unique but dangerous moment where a bunch of forces are smashing in together all at once. There's, of course, the rising cost of living that is stretching people's budgets. We also have a rise in overspending, overconsumption, and people simply living beyond their means. And this is the part I don't see enough people talking about. We have a rise in companies expanding options for consumer financing. This basically means letting customers borrow more money to pay for something at a store. This can be in the form of a company-specific credit card, like registering for a Bath & Body Works credit card. It could be some lease-to-own structure that companies like Ashley's Furniture offers, or it can be how every online checkout nowadays seems to include a buy now, pay later option like Klarna or Affirm. This was something I talked about in my video, Let's Talk the Buy Now, Pay Later Trap, and I want to revisit it here because the part that I didn't get to dive into enough was how normalized all of this is becoming. There is a shift happening. Let me know in the comments below if you guys have felt this shift yourself, but it's this shift from asking ourselves, can we afford this? To instead asking, can I afford this monthly payment? And that shift from total price to tiny installment, whether it's in the form of a debt payment plan or subscription, can quietly lead people into debt spirals that they never see coming. So with that, let's talk about how our feelings around debt and owing money have changed over time, the rise and cost of micro debt, including how it can affect our mental health, not just financial health. And let's talk about what we can do to combat this normalization of owing everyone money. If you're new here, I am Cara and I make videos on the intersection of money, media, and culture. These videos are all about becoming more intentional with our lives and our finances, and hopefully improving our personal relationships with money. So if that sounds like something that you enjoy, be sure to subscribe and check out my video on the Buy Now, Pay Later trap after you watch this video. And before we dive into how debt culture has changed over the years, I have to tell you how mini payments have tricked me into losing money before. You know how I mentioned earlier how the average American with subscriptions has 4.5 subscriptions? Well, for a lot of us, it's not even intentional. We forget, we lose track, we think that we canceled something, and then it quietly just keeps on charging us. And that is actually what happened to me recently. I realized that I had been paying for a service I hadn't used in months, but it was one of those small, almost invisible charges that just blended into my bank account. And I did not notice until I went and checked my Rocket Money account, which also happens to be today's sponsor. See, Rocket Money is an all-in-one personal finance app that helps you manage your money better all in one place. place. You can use it to monitor your subscriptions, lower your bills, build custom budgets, and track your spending. Personally, I like to use Rocket Money to get a full picture of all my reoccurring payments and what my spending looks like month to month. And let me tell you, it can be very eye-opening. You realize that these tiny charges and these reoccurring payments, they really add up over time, and they end up hugely impacting your long-term financial goals. With Rocket Money, you can connect all your different financial accounts so that they're all in one place, and you can request to cancel any subscriptions you no longer want with just a couple taps. No customer service calls, no endless back and forth. They also offer smart budgeting tools and bill negotiation features, so if you're trying to be more proactive with your money instead of constantly reacting to random charges, Rocket Money can be a game changer. If you want to take better control of your finances today, go to rocketmoney.com/Cara or click the link in my description to get started today for free. You can also unlock even more features with their premium. That's rocketmoney.com/Cara, C-A-R-A, and a huge thank you to Rocket Money for sponsoring today's video. So returning to our discussion about debt culture, one of my first questions I had when thinking about this topic was, have we always been this way? Like, has it always been the case that people lived on borrowed money and constantly owed one another? And the answer is no. Or not exactly. To dig into this, let's draw from two books on the subject, one being the book Debtor Nation, The History of America in Red Ink, and the other one being Borrow, The American Way of Debt, both of which are by author Louis Hyman. Dude loves to write about debt, what can I say? And I respect it. You know, he found his niche. What's interesting about these books is that they explain how debt as we know it today, this personal debt that can cripple your finances and is used to purchase consumer goods, is a very new concept, despite the fact that debt itself is a tale as old as time. As Hyman writes in Debtor Nation, quote, "It is difficult to consider debt as having a history because it seems like debt might be that impossible thing in history, something that has existed forever." In 1917, one popular historian described debt as, quote, semi-slavery, which existed before the dawn of history and it exists today. People, in a certain sense, have always lent money to one another. But, and here's where it gets really interesting and relevant to this normalized micro-debt crisis we're in today, Hyman goes on to write, quote, "While personal lending had always existed, before 1917, it had never been legal to charge interest rates high enough to turn a profit. And equally important, lenders had never been able to resell their customers' debts or borrow against them. In short, personal debt had never been able to be a normal business. The big money in America was made by turning the hard work of Americans into commodities, not by lending those workers money." Basically, he is saying that yes, people used to lend money and have debt, but these insane interest rates that we see today, the 30 to 300% annual rates that are beyond predatory, those were not normal. But today they are very, very normal. Like I said in my Buy Now, Pay Later video, you can now get an installment plan with a 30% annual interest rate to finance a burrito. And in my video last year on predatory payday loans, I mentioned how you'll see people taking out payday loans with 300% interest rates to take a vacation. The culture, my friends, has shifted. To be clear, it's not just a matter of individual failure. Like I said earlier, there's this unique clash of forces happening all at once. We have debt and reoccurring untracked payments becoming normalized at the same time as people are comparing their lives, their material lives, to others on a level that we have never seen in history. Those both, I think, are individual failures in many ways. Like, yes, we're not set up for success with our financial education and our pushy algorithms, but ultimately, I think we owe it to ourselves to own some personal responsibility there. And yet, that's not the full picture, right? Because like the books Debtor Nation and Borrow highlight, policy has shifted to allow predatory interest rates to come into the market. Policy has made it possible for businesses to make a business selling customer debt. That has created incentives for things like consumer financing to expand, even to customers who are probably most likely to fall into that debt trap. It's also a cultural issue. In the United States, debt isn't taboo the way it is in other countries. When I visited the Netherlands a couple years ago, one thing that gave me major culture shock was the fact that no grocery stores outside of major tourist areas allowed me to pay with a credit card. I could only use cash or a debit card, and this was a huge issue because I personally don't own a debit card. I just don't. I don't feel like it's as safe as a credit card personally, and I don't carry much cash with me. But I learned that the Dutch are a relatively debt-averse society. They don't embrace the idea of consumer financing and putting it all on a credit card the way that other countries countries do, like in the US. I've also learned through the comments that you guys leave on my videos that rejecting debt culture can also be part of religious practice, like in Islam, where the belief is that you shouldn't have interests on your loans. This is all to say that there are multiple cultural, individual, and systemic issues at play here. And so there isn't, a single silver bullet solution to our problem of normalized micro debt culture. And I'd argue it is a problem. As I've mentioned in past videos, American credit card debt is at a 20-year high, and over half of millennials are using buy now, pay later plans for purchases. From a mental health perspective, the Motley Fool's recent survey reports that, quote, over half of respondents feel stressed about their finances multiple times a week. Now, like I keep saying, there are multiple forces here, including personal responsibility, but there are also massive systemic and macroeconomic issues that make it harder for people to stay afloat. That's why I also try to talk about these topics too, like in my video on the billionaire tax scam. But what makes micro debt especially insidious is that it often flies under the radar. It's not this dramatic crisis moment, it's this slow bleed. It's like a death by 1,000 cuts happening when it comes to micro debt. Because the amounts are small, we end up justifying them. A few dollars here, a $20 split payment there. It feels manageable in isolation, but it's not just one payment. It's every store we buy from, every trip we finance, every subscription or service we let auto-renew. It's all spread out in a way that keeps us from feeling the weight of it, until we are buried under the collective impact. In psychology, the term for this is habituation. When a financial burden builds slowly over time, like a subscription here, a $40 buy now, pay later plan there, we adapt to it instead of reacting to it. Because the increase isn't sudden or dramatic, we don't perceive it as a problem until it's too late. If you've heard of the frog boiling in the water effect, this is basically what is happening. You are the frog in the situation, and the slowly heating up water around you is every piece of micro debt that you take on day to day until, you're done for. And that's the real danger, because it doesn't feel like a big deal in the moment. We don't treat it like one. But over time, those tiny debts chip away at our financial stability, our mental clarity, and our ability to make intentional choices. It's not just about the money. And don't get me wrong, money is very, very important. You can't do much without money. But the risk of normalizing owing everyone money is also about the constant background noise of owing. It's like this mental fog that follows us around. And that's why we have to be more aware of it, talk about it. We have to find ways to reclaim control before it quietly controls us. With that in mind, how do we take control of owing everyone money? First off, by just being aware that this is a problem. Going back to the frog thing, hopefully videos like this or conversations you have in your real life about microdebt can basically be like the frogs sitting in the pot together and saying to each other, is it just me, or is the water kind of getting hot, Should we hop out of here or something? So rather than just normalizing owing everyone money, let's normalize talking about owing people money and falling into micro debt. Doing that makes escaping the trap so much easier. I would also recommend auditing your spending and your subscriptions often, say every few months. You can use a service like Rocket Money, which was today's sponsor, or you can use your own process. Whatever works for you and helps you become more aware of where your money is going. By adding up where your money is going, you can see how big the recurring bills become when you have a subscription, or you have a buy now, pay later installment due, or your credit card interest is racking up. Tracking those numbers makes it so you're not in the dark the whole time, because if you don't know who you owe money to and how often, it's going to be really hard to get your spending under control. But what do you think? Do you have any other tricks and tips when it comes to breaking out of the micro debt trap? Do you feel like our culture is normalizing owing everyone money? Let me know your thoughts in the comments below and what topics you want to see me cover next. A huge thank you for watching, for my patrons on Patreon and those on Buy Me a Coffee for supporting this channel. And thank you guys just for being here. Be sure to subscribe, and I will see you next time. Bye.